Hello everyone and welcome into the channel. My name is Brent. Today is week 31 of our Sofi investing challenge, tiny deposits, real growth, full transparency. We started this portfolio back in May of 2025 with the goal of depositing $25 every single week to hit $1,000 total equity invested by the end of 2025. This whole series was to showcase just how powerful just $25 is every single week, but it begins to compound week after week, month after month, and here we are several months later with capital appreciation saving us from a couple weeks of deposits and nearing our goal. So with that said, if you guys are brand new here to the channel, I would really appreciate if you go down below, subscribe and hit that thumbs up. It really does help out the channel. And if you guys have any comments or questions, drop them in the comment section down below. And I do have a free Discord server if you guys would like to join, ask questions. The link is down in the pinned comment below as well. So let's go ahead and get started. The weekly performance snapshot. So what exactly happened in the stock market over this past week? Now, I generally cover the indexes, as that is generally where I like to focus and see what exactly is the market doing. Well, for the days the 1st to the 5th of December 2025, this was the second full week in the green. Essentially, we are at all-time highs. As of Friday open, it bounced, it went up, touched the top, and it kind of came down a bit throughout the rest of the day. I was kind of watching it there on Friday. Over the past week, the S&P 500 moved up 0.34%. The NASDAQ is up 1.01%, and the Dow Jones is up 0.6%. We are less than a percent away from all-time highs as of close on Friday. With this week, incoming on Wednesday, the Federal Reserve is going to be chatting. We'll talk a bit here in just a minute, but generally, when Jerome Powell comes out on the mic and he says, "Good afternoon," we're going to see a bit of a wiggle on Wednesday. So I'm looking forward to that roller coaster there. Here's the charts as far as the past week. We can see started lower on December 1st and just gradually moved higher, right? We can see S&P is only up 0.34 on the week. So this is just slow and steady, right? 0.06% gains on the day. I did do a little bit of a movement, selling off and rebuying on Friday just because of the downtrend through here. So I kind of sold off along the way, repurchased towards not timing the bottom, but just kind of rebuying into there, the normal actions as I do. Now, some things to consider going into this week. Last week, there was a lot of positives, right? Green, green, green across the board. Here, going into this week, it's a bit more cautious. Second week of December, we have the federal uncertainty. While it's not so uncertain, investors are still pretty cautious until expectations of what exactly is going to be said by Jerome Powell. The Federal Reserve is expected to cut rates in the next 2 days, 17 hours as of this recording. When I looked at the Fed site, which I'll go ahead and put an image here up on the screen, it essentially has an 88.4% chance of cutting. So the uncertainty there, I don't see it as an uncertainty. I believe that we're going to get that rate cut. Maybe the future rate cut into 2026 will be less, right, as the job numbers and all that data begins to roll out more after the government began to reopen and numbers are kind of coming back out. But we shall see. There has been a tech cool off over the last week. I have seen a transition of companies selling off. If you look at the tech companies, the big 7 or 8 companies, you see in the next slide here that a lot of them are actually just mildly up on the week, kind of with the S&P 500, but also a few of them, 2 of them, which we'll talk about here, are in the red, and we see that a lot of that money was kind of rotated. So sector rotation, we saw that the energy sector, we'll take a look here in a second over at Finviz, but we see that some of the energy sector was doing really well. We saw Microsoft and Amazon was red on the week, whereas Walmart was pumped up pretty nicely. So there's that sector rotation. They definitely held up better, showing some green areas. The fear meter, this one actually caught me by surprise. When I went into the fear meter last week, right? We were at fear 24. We were still in the extreme fear. Here we are. I'm recording this video here on Sunday. The fear meter went a whopping 24 to 40. That's upwards of 16 points just from last week close to this week close, right? So it's in really nice position. We also saw the VIX beginning to downtrend again, down 30 some or 13% on the week. So just kind of slowly moving down to the downside with a lot of the pressure from the AI being in a bubble and selling off. It's kind of leaving the market as we go into the Christmas rally potentially, right? A lot of people are taking time off with their families, taking time off for vacation. They're not watching their portfolios and exiting and entering the markets as quickly as throughout the rest of the year. And there's not as many crazy headlines out there that is causing panic and sell and fear and pressure. So that's my take on it all. Now, taking a look here at this is a screenshot from Finviz.com. As I said, Microsoft and Amazon were down a little over 1% there on the week. Microsoft down 1.08, Amazon down 1.58, Apple down a smidge there at 0.01. Google, 0.34. That's fairly good, right? Keeping it in line with the S&P 500. We did see some solid green out there in the market. Nvidia, Oracle, Palantir, Tesla, Meta, all up well over 3 to that almost 8% there. So that sector rotation kind of moving out of Microsoft and Amazon. We see Walmart up 4.16%. Also, if we take a look down here in energy, we see Exxon and oil and gas also very in the green. Now, it was just interesting that it's a mix. That's why it's really nice to invest into the S&P 500 as you get a bucket of 512 of the best companies here in the United States. So regardless if one sector such as healthcare is getting smacked or utilities is getting smacked, right? You still have many other portions of that index, other sectors out there helping it keep it afloat. So, over 50% of them were positive versus the other 50% negative. So that's why we put on that 0.36% on the week. So overall, very positive to see here. Good stuff there. Now, if you guys have not started your investment journey, I would highly encourage you guys to go out there, take a look at all the platforms that are available. There's so many out there, from Sofi, which is the main platform that I've been using here during the challenge. You guys can get started with just $25. You deposit $25, you get $25 completely for free. Also, they have a 1% reoccurring match as well. So if you're depositing $25, $100, right? So here I deposited $25. I got a match of 1%, which is 0.25. So basically got a quarter match. But if you're depositing, say, $100, $1,000, $10,000, well, guess what? That is a much bigger match. So it's well worth it, especially if you have that SoFi Plus, which all you have to do is set up direct deposit. And there are other links down in my pinned comment to sign up for SoFi Plus, where you can get up to $325 cash just for signing up and setting up direct deposit, and a few other things out there. Now, there's still other platforms such as Robinhood, Webull, Moomoo, Public, and Fidelity. Fidelity is my main broker for my other stuff, but there's tons of other ones out there. So let me know down in the comment section below, what is your guys' broker and why? Okay, now as far as our progress goes, week 31 progress update. Our base investment, this is how much capital that we've deposited into this portfolio ourselves, moved up from $859.43 to $884.68. Now, where did that 25 cents come from and that $25? Well, I deposit $25 every single week, and we got that 25 cents from that 1% reoccurring match or whatever. That's where that difference comes up from. And our previous week balance, this is the capital appreciation of the account. We were at $931.58 last week. This week, we're sitting at a total balance of $960.51. We put on a 0.35% gain on the week, which is right in line with the S&P 500 because it's the main index that we're investing in on this account. And that generated $3.31 in capital gains. Overall, our portfolio is up 8.52% from May, so from starting this account, which is a pretty good amount. Plus, our total change is $75.83. So, instead of directly depositing this $25 inside of a high yield savings account and getting anywhere from a 3.4 to 3.6% APY, we're directly investing this directly into the stock market, where we've generated an 8.52% rate of return since investing and have essentially increased our capital gains by $75, which is three weeks of weekly deposits, right? So this well at this time, well pushes over how much I would have made just by directly depositing $1,000 into a high yield savings account. So I like to make this challenge and showcase this challenge to my son. My son is 10 and he has an account over at Fidelity, and he's been looking for ways to go out, walk dogs. Right now we're kind of into the fall, so he's not out there washing car windows and doing other miscellaneous things like mowing lawns to generate tips and money. But whenever he can get any sort of capital, he'll try and deposit it. He owns a couple companies. He owns Voo, Apple, and Meta, and those are all his choices. I just kind of explained what individual one kind of does. He understands Apple, right? We all have our iPhones and we have Facebook and Instagram and different areas like that. And so he understands the business side of it ish, and that he owns Voo because I explained to him it's a bucket of the best 500 plus companies located within the United States. So even if you can't handpick them one individually, then you just buy the bucket and the bucket continuously gets filled and moves into a bigger bucket. So it was pretty good. Previous week, we had 1.48 total shares. We bought 0.04004 shares at $625.27, bringing our new share count to 1.52235 shares. So we are now 52% of the way to our goal of owning 2 shares within this account. And that is essentially it all, right? There's our net contributions, our total capital gains, our market gains, and our dividends. So total gains comes from a contribution or combined of market gains and dividends. And we are due for a dividend here sometime in December, towards the, not September, December. I am 3 months behind. So towards the end of December, we should get paid out a dividend a little bit larger than what we've had in the past, right? Because we own more shares, which we'll talk about here in the future as we get up there. Now, taking a look towards our progress, towards our goal, we are just 4% away from our goal, but this can quickly change if the market decides to have a bit of a pullback. Where as of now, on the 7th of December 2025, we're sitting at $960.51 of our $1,000 goal. This is 96.05% of the way there. And I've been able to I like to monitor the account value throughout each of these week changes. So if you guys are interested in this investment tracker, this is one of the pinned comment, the links down in the pinned comment down below. It's the free investment tracker. You just click on the link, you sign up, whatever information's, and then you are forwarded to a page where you can either download the PDF old version of this, or you can get a copy of the Google spreadsheet where you can go ahead and put in what is your goal for this challenge. I put $1,000 in, and we're just working our way towards $1,000. I like to record the date, the platform, the deposits. Actually I have 25 cents extra in the account, so next week I'm going to be investing $25.25, purchasing up some more shares. And today's market highs are going to be next year's market lows, so it doesn't matter whether you're investing at $590, $608, or $624, right? It's about consistency. As your portfolio grows, the deposits are going to have less of an impact unless you're able to deposit larger amounts. And your portfolio is going to be naturally growing and compounding within itself from capital appreciation, just the amount of equity within there, plus dividends that are reinvested into these shares and buying back more shares, and again, getting capital appreciation. So it's a really nice compounding effect within the portfolio. So that is going to be it for this video. This series is going to be coming to a close probably within the next 1 to 2 weeks, depending on how the market moves. And then most of our videos here on the channel are going to be focused on the fire movement, fire journey so far, covering a lot of topics. I had a lot of questions in the last video, so we're going to be covering different topics and questions that we had throughout that video, where I kind of talked about how I'm living out of my portfolio. That's covering all my monthly expenses And there was just a lot of comments there, which we'll get to in the upcoming videos. So with that said, I would really appreciate if you guys go down below, subscribe, give this video a big old thumbs up, drop any comments, questions. Again, join the Discord. The comment pinned is the link is down in the pinned comment down below, so check that out. There's some other goodies in there as well. And I really do appreciate everyone tuning in and hanging out with me today. So that is it for me. Thank you all for tuning in. I will catch you guys in the next one. Bye bye.